All right, so it's like we'll start. We have three of you who are joined. Let's start the view of our time, please. Can you see my screen, please? Am I communicating? Mr. Mark, can you hear me?
Yeah, I can hear you.
Okay, so
yes, I can hear you.
Okay, so I hope you understand all what I've explained thus far.
My brother, distraction for my body today. Only me and my son day, but no worry.
And as small. Mm-hmm. With time, you understand it clearly. I'll send the material so you can read through. So let me continue on the type of market structures that we have. So we've discussed about the trending and the trending markets, uptrending, downtrending. Talked about ranging market and choppy market. Now, want to talk about pullback and retracement. Pullback. A pullback is a temporary pause or moderate drop in a pricing charts from recent peaks that occur within a continuing trend. Oh my God, they call me like this. Sorry, please, a minute. I'll get back, please. Let me answer this call. Are you with me? Work done, the resume with that. Can you hear me, please? Work done, resume.
Yes.
All right, so we want to talk about pullback and retracement. A pullback is a temporary pause or moderate drop in a pricing chart from recent peaks that occur within a continuing trend. A retracement and a pullback are the same thing. They are used interchangeably. All they mean is that market is moving back against the previous trend, against the prior trend before it may start trending again. Now, let me explain with the help of this picture. Now, you observe that this market was moving up. But this market is a downtrending market, true or false? This particular one is a downtrending market.
True.
Yes.
True.
It's making lower highs and lower lows. This low is lower than this low is lower than this. Now, market does not just move in a straight line. Market does not move in a straight line. When market goes down, it will pull back up a little. You get the point now? When market goes down a little, it will pull back up. If sellers enter the market, they will relax a little bit. Then buyers will take the price to some level. They call it correction. Market corrects. You understand? That correction or a temporary pause by the sellers is what they call pullback or retracement. So it's sort of that market pullback, it's sold off here. I mean, market broke this zone and it's going down. Now you see that it pulls back up. It pulls back from here to this zone. Then when it got to this zone, it continued to go down. From here now, it pulled back again. You see it going up. If you check, maybe if you can check this chart, you see that it will likely keep going down. So market always moves in waves. It goes down and up, down and up. Even in a uptrending market, it also pulls back up. Let us check it in the charts to see it practically. Let me delete all this so that you have a fresh chart. Can you see my chart?
Yes.
Okay. All right. Now, this is what I'm trying to say. This is a downtrending market. Overall, the market is down, is going down. Market is going down. Let me draw a wedge so that you see it clearly. Now, this market is going down. Now, you saw here. So from here, zone, this market sold off. Sold from here. Then from here to this point, the market pulled back. Right? Remember that this is a falling market. This is a bearish market. Sellers are dominant here. What happens is that the sellers will take price down and relax. Like during the night like this, where there's no much trading activity, they relax. Then what happens? Sellers, little sellers, those people who trade, the retail traders, they'll enter the market, drop price a little bit up. Then when the market opens the next day, or the trading will resume proper, main sellers will push it back down. You understand? If it gets down to this place again, you see that it will pull back or it will trace, do some correction. After a while, the main original people who owns the trend do what again? They drag it down. Is it making sense?
Yes, it's making sense.
Now, what happens again? The sellers, the buyers pull it back a little again now. When the original owner, the rightful owner of the market, when they enter, what happens? They take it back to the original direction. The market goes down until the trend changes. Until the trend changes and the buyers take control of the market. And that's what you see here. That's what you see here. And even when buyers take control of the market, what happens? When buyers take control of the market.
It's an uptrend.
Yes, an uptrend, yes. The same pullback. Do we still notice pullback?
Yeah, so.
Yes, you can see it here now. Now, buyers take control of the market. And what happens in the later on? The market pulls back. Sellers entered. Buyers take control of the market. Again, sellers say, okay, make on a relax now, more do small. You get the point now. Sellers enter, do their own small thing. Buyers entered, say, okay, now our market with this, make we do our own. They enter. You get the point? Now sellers say, okay, make we do our own. Back again. You understand? So that is how market structure works. Who doesn't understand all these things I'm saying? I believe we all understand it. Does it make sense? If it makes sense, please raise your hand. Let me know that You people are,
We understand to some extent. You still need to.
okay. All right. So no problem. With time, it will become clearer.
Hello, can you hear me?
Yes, I can hear you. I can hear you. So with time, it does not just come automatically. With time, it will get clearer and clearer until it become part and parcel. So just give it time. But overall, you understand what I'm saying, right? Okay, let me go back to the explanation. Now we've discussed about pullback and retracement. Now let's move further to the cocoa of trading. This is what they call cocoa, or the main point, main thing in trading. Support and resistance. So as a Forex trader, you need to know these key levels, support and resistance levels. They will determine your success or otherwise in trading. Now, what are support and resistance? Support and resistance levels are key areas used by Forex trader to help identify possible points on Forex charts where price may change direction. By studying these levels, a trader can obtain a better understanding of what is going on in the Forex market. They are simply key reversal areas where price had initially reversed at an earlier period. Now, let me break it down. As you can see in this picture, this top here is known as the resistance. Do you notice that when market came to this point, it went down? When market came back to that point again, what happened to it?
It went up.
When market came up to that point here, this resistance point, what happened?
It went down. It went down.
Yes, it went down. Now, the same thing happened here. When market came here, it went up. When it came down to that zone again, what happened?
It went up again.
It went up. The same thing happened here, and the same thing happened there until it finally broke it. And the same thing is what you see here. So resistance are like roof, while supports are floor. Now, the idea of support and resistance is just showing you how far buyers and sellers are able to do. Now, we have understood the concept of a market. Now, when you see a market, to understand what is really going on, to understand the trend of a market, it's advisable that you zoom out to the minimum. Now, you now see truly what is really happening. You see that at this point to this point, this market has been downtrending. And at this point, it has been uptrending. You understand? The market moves in waves, up, down, up, down, up, down. Now, for you to now position yourself, some people were asking the other time, where do I put my stop loss? How do I know where I put my stop loss? How do I know when to place a trade? How do I know when to enter? Is it not the question people have been asking? Mr. Mark?
Yes, I remember I asked the question.
Yes.
I'm listening.
So support and resistance level helps you to identify that. It is usually advisable that you draw your support and resistance level on higher time frames, from daily time frames, from daily, weekly, and monthly time frames. Because the higher the time frame, the more accurate the signal you get in the market. The higher the time frame, the more accurate the signal from monthly, weekly, and daily. But professional traders mostly use daily charts and weekly charts. Personally, I use daily charts to know the direction of market. Now, let me put support and resistance into this chart. Now, you now see that these things that are happening are not happening randomly. It is you, people like you and I, that are seeing the market, and there are certain things they look out for as they are trading. Are you with me? There's nothing
Yes.
happening randomly. All the things that are happening here are programmed. They are being controlled by persons. Let's see this support and resistance zone, how they look at it. Now, like I said, there are key reversal levels. So you now ask yourself, when has market got into in the past and it has reversed? Let me now start identifying it. Now, it's usually best that you start your support and resistance near the current price. This is where the candle is, and this is where the current price is. So you now start identifying those support and resistance levels that are close to it. To get your support and resistance level, this horizontal line, line 2 that is here, is what you use. Drop it near that point. Can you see it? Now remember that I said support and resistance. Support is like a roof, while resistance is like a floor. Now let me start identifying them, then you see for yourself. With only support and resistance, with your knowledge of support and resistance and candlesticks, you can start trading and be seeing massive results from your trading. Can you see it now? Let me zoom in. Does it make any sense now? Now, what do you observe? This is where price currently is. When price got here before, what happened? Market went down. When price got to this point before, went down. True or false?
True, true.
Now, the same thing is happening. When price got there now, did you not see a resistance there? Was he able to go beyond that zone?
No.
No, it's not able to go. So that place now serves as a resistance. It means that the sellers are able to resist that zone based on what happened before. They resisted it to make sure that price does not go beyond that. So likely this market will likely go down a little bit if I thought it would go up because of that resistance that is there. Now, the same thing happened here. The same thing happened here. When market got here, let me use my shape so that you can see what I'm saying clearly. Oh, can you see this point now? You observe that when market came to this zone, market came down all the way down from here. What happened? It went up. So the market, the same thing, it went up and came down again to test it. What happened? It came down a third time again. What happened? Please, I need response so that it doesn't sound like I'm not communicating.
After I came down, it went up again.
Thank you. So these 1, 2, 3 areas, what are they according to the explanation that I'm giving?
Support.
Thank you. So this support now is like that floor that helps you to stay firm. But what will happen if a floor break and person dey inside?
I die you.
I die with that. So now that's just the point. So support are like a floor that helps to stabilize a price. Get the point? Now, like I said, Forex goes up and down. Hello, Bisico. Hello. I bet call me on WhatsApp or send message at the use. Or I'll tell her. All right. Sorry, a call came in that interrupted me. Sorry about that. Are we together?
Yes.
Okay, so like I said, support this area, price came down. Price came down. Price came down, went up, came down here, went up, came down, went up. So it means this place is a strong support, strong or recognized support zone. Now, at some point, a support cannot keep holding forever. There's usually a struggle between the bulls and the bears, buyers and the sellers. Now, at this point, so that what happened here? What happened in this area here?
There was a break now. There was a break in the support. There was a break.
Sorry. There was a break of it, Abi?
Yes.
Thank you. Now you saw that when the market, when price broke it, that place now, it has now become a broken support. A broken support now can become our next resistance because it is no longer a floor. Is it any longer a floor? It's no longer a floor.
No.
Yeah. So now when you are now below a floor, that floor now becomes your what? Your roof, Abi?
Yes.
Yeah, so at this point now, it became the roof or the resistance. So when a support is broken, it becomes a resistance. So you observe that when market goes to that place, there's usually some little resistance effort to want to take it down until it is taken up. You understand me now? So support and resistance are usually key reversal zones where buyers and sellers usually look out for enter. Now, like you were asking earlier, I said earlier that you place your stop loss above key resistance or support level. Now, in this instance, now, let's assume that you saw that this place is an identified support zone, this particular area now. This particular zone where markets currently, you observe that based on previous history, market reversed and this zone, and the same thing is happening. You want to sell here, maybe you sold here. Where are you supposed to put your stop loss? You're supposed to put your stop loss here. Can you see that arrow?
Yes.
Yes, because you are selling, you expect price to give or price to go down. If you are selling and market is going up, are you making profit or loss?
Also,
Yeah, so if you now sell here now, you're supposed to put your stop loss that, okay, oh, just in case this thing does not go in my favor, it keeps going up. You understand? If it goes up, let it take me out. Let me not lose too much. You now put your stop loss here. Put your stop loss there, and then you put your take profit. Okay, if you want to, maybe you want to risk, you want to get 50 pips. You can use your crosshair. If you're using your laptop, use your crosshair. This crosshair, the idea is it helps you to navigate the price. You can see that on the price panel, this left part of the page, as you move it, the price is constantly changing. It helps you to navigate the price, and it also helps you to know to measure pips. Now, let me now do it practically. If you put your crosshair there, you press and hold your right, you right click on, you left click on your mouse, then you drag it. You see now that some figures are now showing. Do you see that 12/401/1.35558?
Yeah, we see it.
Yeah, so that's 401. It means 40 pips. That's 40 pips. 40 pips. As you keep moving it, you can change it to any amount of pips you want. Now, from that starting point where you entered, you can now say, okay, I want to take 50 pips. 50 pips from there will now be 50. This one is 50 pips or 50.4 pips, which is the price you put as your take profit will be 1.35485. You understand? So that's just the point. Who doesn't understand all these things I've been saying?
So I didn't understand the last one. No. The one you just
How
did
more?
now.
Don't understand though.
Which part did you understand? But do you understand support and resistance now?
Yes.
Sorry,
Yes.
sir, I just joined. I did not understand anyone.
Why did you not join early? Tasha, you always join
That
late.
one, better.
I'm in church. We are doing revival.
No wahala. We'll still see what we can do about that. All right, like I explained, just listening in, I'll send you in the material, then you read it.
Okay, sir.
I'll still see what I can do to maybe have a private one-on-one, I mean, a personal session with you so that I can explain to you.
Okay, sir.
So like I was saying, support and resistance are key reversal zones, which we have seen and we have identified. We have identified these key areas. I want to give all of you assignments. Are you listening? Because for you to understand something very well, as you're learning, it's good to be practicing it, to be doing it. You understand? It becomes part and parcel of it. After this session, you go to your chart on your phone, on your mobile phone, open any currency pair, you go to daily time frame, and you use your hand to pinch it. If you pinch it, you can zoom in and zoom out. I want you to identify all the support and resistance zones that you can see. Screenshot it and put it in the group, and I'm going to mark it. I'm going to rate it. Nobody should feel as if he or she has failed. The idea is for you to see that you are following up and you are learning. How do you see that?
That's fine.
Okay, so please, we'll all do it now. That's the test, the first test you are going to. So
Now,
sorry, what exactly do you want us to do?
I said you open your MT4 on your phone.
Okay.
Go to one daily chart. That is D1 daily chart. You zoom. If you pinch the phone, you pinch it in with your two hands, as if you want to, maybe you want to enlarge a picture or so. The chart,
Okay.
the chart will go in, so it will help you to see all the previous activity in the market, just like I'm doing now. As you see, I zoomed in like this to help me see what has really taken place before drawing my support and resistance zone. So you are going to draw all the support and resistance zone that you can identify. Then you post it in the group for me to see.
When you say we're going to draw, I don't understand. We don't
Sorry,
know how
Draw,
to
you
do
put
this.
all
to
these
do
lines,
it.
these lines.
As
Can
in,
we
we're
draw
going
the
to put
line? Can we draw the line with a phone? With our phone?
Yes, yes, you see it there. The line chart, the line
Okay.
there, it's there. I will show you. I will screenshot and send to you. So
Okay.
now, like I explained earlier, let me just do a quick recap. Support and resistance zones are key reversal areas. The rule of thumb is that you buy from support and you sell from resistance. What does it mean? You buy when the market is low and you sell when the market has gone up, when it is high. Just like in every market, even those who trade crypto, do you buy when the price is very high?
No.
No. So if you understand Forex very well, when you see Bitcoin chart, you will know that, oh, this is not the right time to buy. This is the right time to buy. The knowledge of Forex will also help you to analyze a chart very well and know when to make decision, trading decision. Let me delete all this again and start all over so that you understand it. Like I explained earlier, that support and resistance are key reversal zones in the market. And for you to get your support and resistance zones very well, accurately, you need to draw it from daily time frame, from daily, from monthly, weekly, or at least daily time frame. They will serve as a guide for you to know how accurate the support zone is. And I told you that it is usually advisable to start drawing your support zone near the price. The price is currently at this zone. The price is currently here. So what has happened in that place? You now look for the recent high. The recent high that the market has made, and you draw your first support near there. And this is the last high that the market made. This candlestick that you see that has like a wick. Come here, place your horizontal line there. Can you see me? Can you see what I'm doing? Then you now start looking for other areas that market has gone to.
I can't hear you. I can't hear you, sir.
You can't hear me. Sir, you can't hear me.
I can hear you now.
Okay, maybe it's your network. So
I got the first line you drew, but the other two now that you placed, I don't know. You said identify other places that the market have gone to. How? What?
you are identifying the highs and lows. I mean the major turning points. You understand? Now
Is it inserting the support or inserting the resistance or setting both?
setting both. When you draw them, when you draw those lines, you will now know which one is support and resistance. Let me start all over again. Now, like I said, when you open a chart, it's usually advisable to draw your first support near your price. You look at the high that has been made near, the recent high that has been made near that price. And if you look at it very well, let me zoom in. When I say high, a high simply means the highest level that price has gotten to so far before it reversed. And when you look at it very well, this place is the highest, is the high that it has made. Recent high. Is this not the recent high?
It is.
Yeah, so now I come here and say, okay, let me place my horizontal line on that high and see what has happened. Why did that thing go to that place and go back? Why did it go there and go back? Now you place your line there. You look for another area that market has gotten to, and likely reversed. If you look at here, you see the market came here, went up. See, it came back here again and went up before it broke it. So you see that this place is a major support zone. Am I correct?
Yes.
Yes. Market came here and went up, came here again, went up before going down. Now, when you observe very well again, if you look below, see that there is another support here. And support doesn't mean that price must touch that thing. It might just near it a little bit and go up. Like you saw here that it came a little bit down here and went up. It came a little bit, it touched it, went up. You saw that it was even about to break it down here before they pushed it up. You understand? I saw that this one, it touched it about 3 to 4 times. This is what they call in Forex strong support. This is a very strong support, meaning that that place there, from that point forward, the sellers could not break through. Market, the buyer's presence is very strong, so they took the price up. When you see such kind of activity here, you know that such area is a very strong support or resistance. Now let's go up a little bit and identify the support. Now, if you look at this area very well, you saw that price came up here and went down. Try to go up a little bit again and went down. So that place is strong. It's another key resistance level. Are you following me?
Yeah, so we are following you. We are trying to follow you.
It's a gradual process. With time, you start understanding it. I'm going to send a write-up. I have less than 1 minute. This meeting will soon end. So if it ends, I'm going to start the meeting and send the link. So please, you quickly join so that we can finish up. So the supports are key areas. Support and resistance are key areas that you need to make your trading decision.
So there can be as many support and resistance areas in a chart.
Yes, like I told you, there can be as many as possible. Sometimes price can go, but the most important thing is you don't just draw them randomly. You must, at least there must have been activity that has taken place in that. Like if you look at this place now, you observe that this place is a strong support.